Well, spare a thought for the Future Fund's Board of Guardians. In 2006, they were given a mandate to produce returns of above 5% per annum above the inflation rate over a rolling 10-year cycle to fund the nation's public sector superannuation liabilities. Well, with the benefit of hindsight, it was not the most propitious time to start such an operation. 5 years on and the Australian stock market is down about 20%. But fortunately, the Future Fund didn't fully invest in equities, nor, given the current environment, is it likely to do so anytime soon, with the $75 billion worth of assets that it manages. So how does the Future Fund see the unravelling crisis? I spoke to its chairman and former Commonwealth Bank chief, David Murray, earlier in the week. Well, David Murray, you've been saying for a while that we're in a long-term deleveraging process around the world, but I guess the thing that's on everyone's mind at the moment is, are we likely to see a credit crisis? In the meantime, another credit crisis?
Well, I think we're seeing that already in Europe because investors are so concerned about what might happen in Europe that they're already taking views on liquidity and currency of denomination of assets and making adjustments as we speak. So that has caused the European Central Bank to intervene in ways that probably weren't envisaged. And until the leaders in Europe come up with a definitive plan, this sort of thing will continue.
I've seen it said that the 2008 crisis was essentially a liquidity crisis, where the banks just stopped lending to each other, but that this time it's more about solvency, in particular the solvency of European countries.
Well, yeah, the level of indebtedness in some countries is too high, and Europe is a free trade zone. It doesn't have a single fiscal zone set of rules. It has some monetary rules, and it's not one labour market either. So it's a very loose federation, and that's going to have to change if the countries are going to hold together.
So as we sit here now, what's your view about the outlook, and how does that affect the Future Fund's investment strategy?
Very difficult, because, and this is reflected in the way the markets are behaving at the moment, because nobody knows which political set of decisions will be made by European leaders. They can't judge the extent of fiscal turbulence in Europe, and therefore uncertain about which assets to invest in and what to do about their liquidity. So we really need the European leaders to sort this out, and then to come up with a model for a different form of union after that. It's a very tricky situation, but unless Germany takes the lead, it is very difficult for others to follow. And for Germany, it has been a huge beneficiary of the weaker euro with the southern states in it. And if hypothetically Germany were to leave the euro, it would probably cost them 25% of GDP.
Okay, but to simplify it, are you increasing your exposure to equities in the Future Fund or reducing it?
Well, we have a fairly defensive portfolio. We've been sitting with that portfolio for some time. We don't like to make rapid adjustments or frequent adjustments, because our view is that it has not been very clear which way the world would come out. That is, whether the world would come out of this problem with higher inflation so that debt was devalued, or it would come out with a lower growth with a disinflationary outcome. Now, you know, the crowd's starting to favour the latter at the moment. It's becoming clearer and clearer, but that's why we've been positioned the way we have, and that's been successful for us.
You mentioned about the politicians in Europe needing to get on top of the situation. What's your view in general about political debate, both in Australia and around the world at the moment?
It's quite clear that the crisis was caused by failure of government, because government stood by whilst easy monetary policy for a long time inflated asset values in markets beyond sustainable values. And at the same time that was happening, they were witnessing a leveraging up in the private sector, and at the very same time that was happening, they were leveraging up in the government sector. So this is a failure of government to understand the realities of financial markets and of fiscal discipline in their own countries. That caused the leverage that caused the crisis, and that was played out as we've seen. What this says to me is that people elected to political life have far too little an understanding of the limits to debt that they should have. They have far too little an understanding of their responsibilities as elected representatives to maintain the agencies of government and oversee them and understand them.
Okay, so the question is, does that apply to Australia? I mean, Australian politicians in general, not just the current lot, but previous ones, have said that we're in a better position. We've come through the crisis in good shape, and our political leadership, therefore, is better than elsewhere in the world. Is that true?
It's not reflected in the mood in Australia. In Australia, we've got about a 20-year uninterrupted growth period. We've got nearly record ever terms of trade, and we're not prospering. So the settings here are not right. And the thing that is overlooked most is that due to the shape of this country and the short modern period of development we've had relative to the rest of the world, we have very high net foreign liabilities to GDP. That is, we're users of an enormous amount of capital from the rest of the world. That very fact means that we've got to turn these years of prosperity and the terms of trade boom into a much more secure future financial position. That means with lower net foreign liabilities to GDP.
Well, do you think that there's a sign that that's going to happen from the current policy settings?
No, there's not, because in the situation we're in, a lot of the foreign capital is needed to invest in the terms of trade boom in the resources sector. There's a lot of investment in other sectors as well, but that needs to be done. This is not a time when state and federal governments should be becoming more highly indebted, and they are. So that is a weakness of fiscal policy in Australia, and it is holding back development and making the so-called Dutch disease risk higher than it need be.
There was a bit of a flurry a week or two ago about the government possibly raiding the Future Fund for $250 million, and then it was denied. So what was that all about? Did you get involved in that at the time?
I can absolutely assure you this is a technical issue. It's got to do with the definition of financial assets and non-financial assets. Were the fund to accidentally acquire a non-financial asset and dispose of it, which is covered in our Act, unfortunately, the disposal of that asset would go on budget as a gain. It's entirely a technical matter. There is no cash flow between the government and the Future Fund, and there's been no suggestion whatever of any withdrawal from the Future Fund.
So are you acquiring?
And I just should add that, I'm in constant dialogue with the nominated minister, Penny Wong, the finance minister, and she has a very solid understanding of what's going on. Has been, like all the others before her, very good ministers for us.
Right. There's been a lot of talk that one of the challenges for Australia is infrastructure and the need to invest in infrastructure, and a lot of people look to the Future Fund to do that. Is that an issue? Does that get caught up in this technical issue that you don't really want to own infrastructure because it's a non-financial asset?
No, and they're not related issues. Good infrastructure is a very good asset for a sovereign wealth fund, and it's a very good asset for a pension fund, because in time it starts to throw off a lot of cash, which helps, particularly with pension funds, meet their cash out requirements. And even a sovereign wealth fund that has a trickle of cash out back to government, like particularly a stabilisation fund, if you can do it, would really benefit from infrastructure assets. The problem is getting them, competing for them, getting the right ones. And
so have you been running the ruler over toll roads, for example? Because there's been a lot of action.
I don't want to mention specific assets because we compete for assets in the market, but we've got a very good team on infrastructure, and we've looked at a lot of assets, and it's already known we're a decent holder of one of the holders of Melbourne Airport, which is a great asset.
Leave it there. Thanks very much for joining us, David Murray.
Thank you.